Let me introduce this young entrepreneur. Jeff is a qualified stockbroker and the founder and CEO of UpTrade, an Austrac registered crypto broker that gives every client a dedicated human broker and access to more than 500 digital assets through a single relationship. Most people invest in crypto completely alone. No one to call, no one who knows their situation, and no second opinion when it matters. Jeff will unpack what it means to invest in digital assets with structure, support, and a qualified professional beside you. So welcome up to the stage, Jeff.
Thank you for having me, and thank you everybody for coming tonight. It's good to see a lot of nice faces. So, yeah, I'm Jeff. How's it going? So, I come to you tonight with over a decade of crypto brokering experience. I've worked in the industry for quite a while, and I've also invested for those 10 years as well. So I'm a former brokerage director at one of Australia's largest crypto companies. And we focus on the real stuff, market intelligence, risk management, helping clients understand market trends. We aim at educating our customers. So many of you may or may not know, but crypto has vastly changed. The market's matured, all right? We have real financial assets coming, we have regulation on the table, but people are still taking the old fundamental approach, the old throw the dart at the dartboard investing approach that did work in previous cycles, but it doesn't work anymore, to tell you the truth. Most people still think crypto looks like this. Has anyone in the room bought a meme coin before? Yeah, I think we've all been there. Look, at the end of the day, the crypto.com boom is practically over. The easy money has left the building, everyone. So if you're coming to spin a wheel at the casino, if you treat it like one, it certainly can be. But at the end of the day, it's becoming more professional, more regulated, and real products and financial institutions are here. I actually had a chat with an Uber driver not long ago, and he was my age, actually. He was 36. And he said to me, "What do you do?" And I go, "I work in crypto." He goes, "So that's like a casino, right?" And that kind of got me thinking. I'm like, that's the uneducated perspective. That's a perspective from somebody outside the bubble, And it is funny to us, but to him, he genuinely thought it was. He goes, "How do I? Can I make money from it? Is it an actual investment?" And in some ways you can, yes, absolutely, but you can treat it like a casino as well, which is But it is long becoming a different beast, and this is what we're all here for. The real revolution to come. So the market's grown up. So no longer are you trading against other beginners. When I first invested in crypto about 10, 11 years ago, I bought my first Bitcoin for around $200. Luckily enough, I wasn't earning enough. I was only earning about $250 a week. So yeah, you can imagine how many of those things I could buy. But look, I did what I could. But it just goes to show that back then it did reward being early. If you were early, we all know the stories of somebody who bought crypto 5, 10 years ago. They did really well, and now they're living on a yacht in the Mediterranean somewhere. Good for them. But that doesn't work anymore, and everyone still thinks that still applies to new tokens, to new projects, to all these different things. And it actually just rewards being educated. It rewards getting up to speed and understanding the ecosystem and where it's going. Famous investors out there have said lots of times that you shouldn't really be looking at what is good now, but you should be looking at what is good in 5 or 10 years from now. So these are the people that bought NVIDIA 5 or 10 years ago. So the competition's changed as well, okay? So not only are you starting off as a beginner, but you're trading against institutions. Soon banks, you're going to be trading against AI, algorithms, and professional capital, right? I was at a conference a few months ago and I was talking to these Dutch guys. They run their own internal trading fund. And I said to the guy, I go, "How's it going?" He goes, "It's great. It's like shooting fish in a barrel." So that is what you're up against. Unfortunately, investors just haven't kept up. The market's matured, but most investors have not. So obviously scams are still highly rampant. 12.7 billion in losses in 2025 by investors lost to scams, and 6 billion this year in 2026. So you can sort of see here down the bottom right where it says 73% institutional investors are planning to increase their crypto allocation this year. So this isn't any of the monkey pictures or any of the meme coins we were looking at before. They're actually looking at assets like Bitcoin, Ethereum, and other ETF-related assets at the moment. Crypto is more than just coins. So the coin is actually the most unimportant part of the story, in my opinion. It's everything else underneath it, right? The coin is the tangible piece that you can interact with, you can buy it, you can hold it in your wallet, you can move it, you can trade it. But what actually happens underneath that? And this is the financial sort of infrastructure layer we're talking about. So we're talking about payments and settlements, actual ownership, transparency. So transparency is really important because you need it for auditing, right? Most of financial crime happens from within finance. So being able to audit it is really important. And liquidity, being able to sell it and trade it and buy it. The real world adoption is already here. So if you speak to investors, you speak to one investor who's never invested in crypto, who probably will never invest in crypto, the skeptic. And then you've got somebody who's a crypto veteran who's been in the game for a long time. And then you've got somebody who's planning to buy crypto. There's one thing that they all can agree on, and I'm sure that we can all agree on the same thing in this room, is that digital assets and blockchain is the future of finance. Everything we see, everything we own will be digitized at some point, and it already has made that big step. Institutional adoption, I was actually super surprised to hear, even today I speak to guys in traditional finance and they're skeptics. They're asking me about Bitcoin. And I say, well, did you know that BlackRock, the biggest financial institution in your sector, they've created the world's first Bitcoin ETF? And they go, huh, what? So it's still not really turning that corner. When it comes to commodities trading through the crypto infrastructure, I don't know if many of you saw that, but Hyperliquid is a trading exchange, and essentially people are able to trade oil on the weekends and front run US market open. So obviously the DTCC, they are the settlement layer in the US for all stocks and bonds overnight. Their eyebrows raised and they said, wow, okay, that's an opportunity for us to fix a market inefficiency. They came out and actually said, we're going to put everything on a ledger, everything is going to be digitized and tokenized. So big moves are happening behind the scenes. So where is this all heading? So we've talked about vaporware, we've talked about meme coins. The next evolution is real world assets. This is where you can practically tokenize property, stocks, bonds, commodities, all on chain. So what does that actually mean? It means your sons and daughters can invest $100, invest $50, $1 across 50 different houses, $20 across 20 different bonds, and $30 across 20 different stocks. And they can do it 24/7, 365 with instant liquidity. So for me, I don't know if many of you guys, can you put your hand up if you bought international stocks before, US or anywhere else? My experience, and correct me if I'm wrong, yeah, it was a few years ago, but I had to sign up in KYC with a broker. It took about 7 days to get done because I had a trust. Apparently it's complicated, it's not. And then they essentially, you have to essentially send your money to them, and then they have to essentially send your money somewhere else to make the purchase, right? We saw that with the SpaceX IPO. Your money has to change hands a few times for you to actually get access to it. So with real world assets, that doesn't happen. So. Why does it matter? Better rails, in the end, they always win. So in traditional finance, as we mentioned, settlement speed it's pretty slow. If you buy shares, you get your settlement in a couple of days. Geez, if you're trying to sell a house, how long is the settlement time? 90 days? 6 months? Yeah, it's really long, right? So imagine if you could get your house settled in minutes. That would be incredible. All right, transparency, as mentioned, most fraud actually comes from within banks, within financial institutions. Having verifiable transparency on chain will allow, will not enable as much fraud as before, okay? Accessibility, market hours only, 9 to 5, 5 days a week. We can turn that on 24/7, 365. And liquidity, fragmented markets. So, being able to, if you have your crypto with your exchange and then you have your stocks with your stockbroker, you have multiple banks. Imagine if you could have it all in one place. Let's talk about the advantage. So, you missed being early, sure, but that's no longer the edge, so that doesn't matter, okay? The edge has actually shifted to knowledge, from timing to knowledge. Being informed is still fully available to you. And as Rachel said, you need to kind of learn and understand things at your own sort of level as well, so that you can sort of steer things with a professional as well. That's what we find works best hand in hand. But companies are now allocating over 1.7 billion in Bitcoin. That's 8% of the supply. So they're already in. The smart money's already here. All right, so you know what they say, follow the smart money, right? And success leaves clues. What happens when you have a tax problem? Who do you call? All the problems, no. Or what happens if you have a legal issue? Who are you going to call? Ghostbusters. Yeah, that was a good one. Yeah. No, you call your lawyers, right? If your car's engine blew up this morning, are you going to get under it and try and fix it? Maybe a couple of the lads in here could probably do it, I'd say, but I certainly wouldn't. I'd call a mechanic. So crypto is one of the only areas where everyday investors are still trying to battle and take it on alone. And like I said before, you're literally trading and investing against full firms, algorithms, AI. It's really difficult. So the framework. Once you get your foundations in place, you understand your goals, and you're structured correctly, and you can identify what the opportunity is by looking at where we've been, where we are now, and where this might be in 5 or 10 years. If you can pair that with great research, understand how to do good research. It doesn't need to be research papers. You don't need to read technical white papers and all that sort of stuff. It's more just about understanding what your goals are and finding strategies that suit those goals and places you can find great information for that. And then to tie it all off, you have to protect it. We live in a digital age. No longer are there hooded bank robbers running into banks, and running out with bags of cash. No, they're coming for your personal identity. They're coming for your phone numbers, your email addresses, anything that's not tied down, that's tied to your name, that's what they're coming for. So having your digital security is more important. And now with AI, it is getting pretty scary out there. So the opportunity, it moved from the early to the prepared. The opportunity didn't disappear. It moved to people who are willing to do the work. Like any good skill, you have to put in the time. It doesn't change for investing. So understanding gets you started, research tells you what to act on, and security protects it once you get it. So that's exactly where we go next with Kane. Thank you, everyone.